Section 35. Expenditure contribution for scientific research, then you will be eligible for claim the deductions 100% for the expenses, even capital expenditure. Is that okay? Section 35 class 1 subclass 1 and 4, section 35 class 2 subclass 4. Clear? For any scientific R&D purpose, is that okay? For scientific R&D purpose, if you have any expenses spent like plant and machinery, okay, land cannot be deductible. Building value can be directly debited in your P&L account 100%. Plant and machinery expense value also completely debited in your P&L account. So if you are debiting the entire value you spent for purchasing the plant and machinery as well as constructing the building, probably lab and scientific R&D purpose building, the entire value can be debited in your P&L account. Because of that, the profit will be decreased and you are paying lesser tax. So it's a favor given by the government to promote your R&D expenditure. So all these things are capital expenditure. All these things are all other capital expenditure. You can claim the deductions. What about the use, sir? In case of depreciation, put to use is the matter. If the put to use less than 180 days, you are eligible for half year's depreciation only. Such a logic is not applicable here. Whether you use it or not, you can claim 100% deductions here for the expenses related to the capital item. What happens in case of revenue expenditure, sir? In case of revenue expenditure, may be material. For any research related material you could have purchased, and salary payable. In salary, of course, perquisites is not forming part of salary to be deductible. Clear? Hope you will be now able to understand. Clear? Now, these items can also be deductible at the full value, 100%. Revenue expenditure, whatever it may be, revenue expenditure. Now, previous year being 24-25, prior to that previous year, 23-24, 22-23, 21-22. In this year, these 3 years, the scientific R&D you did in 2024 and 25 becomes successful. Thereafter, you converted that into the commercial production and you launched the product in the market, making the business. Okay. So this happens only in this year, so you can claim the deductions. Before that, you spend money only for the R&D, sir. We don't have any estimation whether the project may be successful or not. Then you can accumulate all this value and you can claim the deductions in the year of successful launching that. Provided all the expenses related to the scientific R&D should relate to the 3 years prior to the previous year. It may be revenue expenditure or capital expenditure. During the year you are doing your business, parallelly you are doing the R&D, then R&D, all the expenses can be debited to the P&L account. Capital expenditure, in case of revenue expenditure, salary and other things also be debited. But I didn't have any profitable business, sir. I am doing the R&D. I am not sure whether the R&D may be successful or not. Sometimes later it is successful. Now only I start the business practically. What happens then? All the accumulated expenses related to the scientific R&D put together can be adjustable in the year of commencement of the operations. Okay, provided that expenditure should be immediately prior to the previous year. 3 prior to the previous year can be taken. In case of revenue expenditure, for the prior to the 3 prior years, you have to get the certificate regarding this expenses. The expenses you incurred, should get the certification that the expenses meant for the R&D purpose only for the prior period. Expenditure on business related research. If you are incurring any expenditure for developing any product, or already you have the product, improving the product's performances. For all those things, you can spend the money. Those money can be deducted. Okay, during the course of business, okay, already. So in case of Maruti Suzuki and Mahindra, they have already car manufacturing and launching new models year on year. For launching new models year on year, they need to do lots of R&D side by side. All the R&D expenses can be debited in their P&L account. But a newly emerging company, they don't have any product. They now involve in scientific R&D. Sometimes later the R&D becomes successful, then the commercialized product may be launched. In that case, all the expenses earlier incurred can be claimable in the year of starting. So during the course of business, you can directly debit. But prior to that, before the commencement of the operation, okay, you start your operation only in 24-25 before that. But within 3 years immediately preceding the commencement of the business. 3 years, if the business commenced on 1/4 and prior to that, 3 years will be taken here. Okay, material expenses, salary can be debited in your P&L account under section 35. But in salary, perquisites is not forming part of that. Provided for these two need certification for the expenditure. You have to get the certification related to the expenditure from the concerned parties. Capital expenditure except land, even not used, can be deductible during the course or before the commencement. During the course, of course, you can claim 100%. Before the commencement, should be within 3 years immediately preceding the commencement of the business would be taken. Is that clear? Hope now you'll be able to understand this one. So we have seen 2 items. One is all about expenditure. Another one is contribution. Expenditure is nothing but expenses you do for R&D related to your business related research. Okay, so whatever the expenses may be, in case of capital expenditure except land, you can claim 100% deduction. In case of revenue expenditure, can be directly debited. But you don't have any current business, you are doing the R&D. Sometimes later only we come to know whether it's successful or not. If it is not successful, it's a loss only. If it is successful, automatically in the year of launching the product, you can claim all the earlier expenditure for the R&D, provided not more than 3 preceding to the previous year of the commencement of this commercial operation. Is that clear? Contribution is nothing but I cannot do the R&D myself, but I am helping the other R&D agencies for their own R&D purpose. If I am donating for somebody else for their own R&D, I can claim the deductions. This is all about donations, like contributing for the others R&D. So where we have RICU, okay. Research association and any institutions or colleges and university. ICU, intensive care unit. Okay, rare incident. Don't expand yourself. It's for memory purpose. Don't write in your examination. Right? RICU. So, research association, institution, university, colleges, and scientific research. For what? Scientific research. Or social science and statistical science. Whether it may be scientific research or social science and statistical science. Or donating to any Indian company for scientific research. Or any approved national laboratory or IIT. While donating to the National Laboratory or Indian Institute of Technology, IIT, you have to donate with a specific direction. This donation can be used only for this purpose only. With that statement, if you donate, the 100% of all these donations can be deductible. The illustration was very comprehensive in earlier days. Now it becomes very simple. Okay, earlier 200%, 175%, and 150, 125%. Lots of variations were there. But today, flat rate, only 100%. So the problem becomes very easy. And that too in case of donation, only if you are shifting out of the default tax regime is enjoyable. So it's not available under default tax regime under section 115 BAC. If you are shifting out of, then only you can enjoy. But in this case, expenditure can be enjoyable for both the tax regime, Is that clear? It's pretty simple. Now let's start. Discuss the allowability of the following expenditure for scientific research. Scientific research company, for that you spend. How much you can claim? Under not 115 BC, BAC 100% can be claimable. And research association for scientific research 100% can be claimable. National Laboratory, University, IIT 100% can be claimable. Social and statistical research 100% can be claimable. So all the value can be claimable. In case of if you are opting default tax regime, nothing can be claimable. Is that clear? Let's now move on to the next one. Any doubts here? So now let's move on to the next one. Three predominant illustrations we have. Okay. Now I move on to the next one. I move on to the next illustration. If it is clear, text me online students, come on. Now, GB Limited was incorporated on 31/12/2023 for manufacture of tires and tubes for motor vehicles. The manufacturing unit was set up on 30/4/2024. The company commenced its manufacturing operations on 1/5/24. The total cost of the plant and machinery installed in the unit being 100 crores. Plant and machinery. The said plant and machinery included second-hand plant and machinery bought for 10 crores. Okay, second-hand machinery. And new plant and machinery for scientific purpose. New one for scientific R&D. Okay. Value being 10 crores. Scientific research relating to the business of assessee acquired at a cost of rupees 10 crores. Compute the amount of depreciation allowable under section 32 of the Income Tax Act in respect of the assessment year 25-26. Out of 100, 10 crore is for the second hand machine, 10 crore is for the new machine purchased for scientific R&D, balance being new for the regular business, new one for regular business. Is that okay? A regular business. In case of scientific, the asset purchased for scientific R&D, you can claim 100% deduction under section 35. How much is that? 10 crore. That is separate. What about these two, sir? These two will be comprises the block of assets. So I now open a new one, plant and machinery. Block has rate of depreciation being 15%. As nothing stated, you assume that the plant and machinery falls under the general category. Okay, general category will be always 15%. Okay, so as I already told you, know, if nothing stated, then you will usually assume this being general category 15%. And opening derivative in nil and newly purchased value. Okay, newly purchased asset being 90 crores. Okay, no sales, no 6. Okay. So 90. You have the asset as well as you have the value also. You can claim the depreciation. Depreciation under section 32. Class 1, subclass 2. Am I right? That's what about the depreciation under WD value. As the asset put to use on 1/5/24, used more than 180 days. So eligible for full year's depreciation. So 15% on this being 13.5. Apart from that, there is a classification like second and new. So automatically what happens? Section 32 clause 1 subclass 2a will be there, additional depreciation. Additional depreciation. As per the additional depreciation for the newly purchased asset, as the asset put to use more than 180 days, 20% WDV means depreciation may be claimable as additional depreciation, which is 20. If I subtract these two, then what is the ultimate value? Huh? Okay. 20% on 80 being 16. Then overall depreciation being 29.5 can be subtracted. So what is the ultimate value? 60.5 will be the closing WDV. Closing WDV. So in your P&L account, what you can do? Depreciation under section 32 being 29.5 and deductions for R&D under section 35 being 10 crores. This is what about the amount you can claim as an expenses. Clear? Clear? Okay. August 15 you may have a full day class. Okay. So you are independent by the time. We'll now move on to the next class. Next illustration. Shall I go? A company engaged in the manufacturing of fertilizer products commenced its business on 1/4/24. Before 31/3/21, it incurred 15 lakhs. So, commencement being 1/4/24. Previous year ends on 31st March 25. This is the previous year. Before 31/3/21. 31/3/21. And what about this time? If you start the business on 1/4/2024, any R&D expenses you incurred prior to that at least 3 years, you can claim the deductions. So for this period eligible, this period will be neglected. Before this date, it incurred 15 lakhs. So here what happens? 24 earlier, 23, 22 and 21. Year 1, year 2, year 3. 3 years are over. Is that clear? Now, it incurred before 31st March 2021, it incurred 15 lakhs for salaries, raw materials, capital expenditure for the purpose of research connected with its business. Here 15 lakhs. During the financial years 21-22 to 23-24, 21-22, 22-23, 23-24, these 3 previous years, it had incurred 5 lakhs, out of which 1 lakh is unapproved. Okay. Annually as expenditure on salaries and purchase of raw materials. So salary and raw material. 5 lakhs. 1 lakh being unapproved. 1 lakh being unapproved. So should be removed. Should be removed. Okay. Incurred 10 lakhs for plant and machinery. And 2 lakhs for building. And 2 lakhs for land. For the purpose of research connected with its business. During the previous year 24-25, this is all about the current year, incurred scientific research revenue expenditure. Here revenue expenditure 4.5 lakhs. And a capital expenditure 4.5 lakhs on purchase of plant and machinery. And 2 lakhs on purchase of land, 3 lakhs for purchase for construction of building. for building, value being 3 lakhs. Right. This one annually incurred. Okay. So 5 lakhs minus 1 lakh. Out of 5 lakhs, 1 lakh is unapproved, so 4 lakhs only taken. So in case of salary and material, prior to the commencement of the project, if you incur anything, it should get certified. So here 1 lakh remains uncertified, so only 4 lakhs can be taken. Multiplied with the 3 years, 12 lakhs can be deductible. How much is deductible? 100%. Plant and machinery, deductible. Building, deductible. Land, non-deductible. This one, non-deductible. So overall value being 24 lakhs. For the current year, revenue expenditure deductible, plant and machinery deductible, land not deductible, building construction deductible. Overall value being 12 lakhs. Ultimate value to be deductible under section 35 being 36 lakhs. Is that clear? Hope now you will be able to understand this one. Shall I move on to the next one? Make it faster. Now, see in your factory you have R&D division and regular factory workshop. You purchased a plant and machinery for R&D for rupees 100 lakhs. For rupees 100 lakhs. How much deductions can be claimable? Entire 100 lakhs can be claimable as deductions. So, deduction under section 35 being 100 lakhs in the previous year. Probably in the previous year 23-24 it was purchased. And they claimed the deduction at the rate of 100% on this under section 35 and debited in their P&L account and reduced their profit and paid lesser tax. Now, the asset purchased for R&D, later on sold without further use. 2 or 3 years it is used for R&D purpose, but here 1 year is used for R&D purpose, later on it is sold. Okay. Some buyer is there, to them it is sold. Sold without use. Okay. How can we handle this situation? The sale value being at 60 lakhs or 120 lakhs. Two scenarios. Two scenarios. How can we treat this? Right. Sale value being 60 lakhs and 120 lakhs. Two scenarios are there. Original value being 100 lakhs. I'll just finish up the first scenario. Deductions claimed under section 35 being 100 lakhs in the previous years. Today the book value being 0. Today the book value being 0. But this asset after some usage, sometimes used for R&D, sold in the market for 60 lakhs. For 60 lakhs. What happens here? What happens here? You get 60 lakhs revenue, no? How can you handle this? Just to recollect the SLM method of depreciation, balancing charge as well as terminal depreciation and all. Is that okay? We don't have what? We don't have loss definitely because the value is 0. You cannot sell beyond this value. Okay. Isn't it? Unless there is disposal expenses. The value may be 1 lakh. For the disposal, we need to spend 2 lakhs. Then minus 1 lakh also be possible. Rarely. Okay. So already the book value of the asset being 0, sold for 60 lakhs. Then what about that 60 lakhs? It's the income. What sort of income is this? There you just recap with the SLM method. Huh? Huh? Is it true? Recollect that. Notional income. Notional income, otherwise named as what? Deemed income. I told you, no. Deemed income. Okay. Otherwise named as balancing charge. Balancing charge. Is that okay? Any revenue you generate by selling, to the extent already debited in that with respect to the same asset in the P&L account, will be considered as your balancing charge taxable under section 41 class 2. So here for this particular asset, already how much we debited in the P&L account? To the extent 100 lakhs was already debited. To that extent of this will be considered as your income under section 41 class 3. 41 class 3. Okay, 41 class 3. Sale value of asset used for scientific R&D, and it's your PGBP income. It's your PGBP income. Is that clear? If the asset sold for 120 lakhs, what happens? Come on, now tell. To the extent already debited will be your scientific R&D income. Beyond the original value is your short-term capital gain. So you'll get the short-term capital gain. Come on, tell me what is the short-term capital gain in this case for the second scenario? 20 rupees. Any sale value beyond the actual value, original value, beyond the original value will be your short-term capital gain. Up to the amount deductions claimed already will be considered as your scientific R&D PGBP income under section 41 class 3. 41 class 3. Is that clear? Hope now you will be able to understand section 41. This section 41 class 1 we will study later on. 2 we studied along with the balancing chart. 3 we studied here. 4 we will study along with the section 36. And 4A also we have, but of course not required for your inter level. And 5 rare for your inter level. Is that okay? So that's not required at all. So 2, 3, 4 you have to study all the 3 in sequence. And you have to include 41 class 1 also ahead of that. So all these things are we will be covering along with the 41 section. But while teaching the 41, I recollect all these points there. So 41 class 2 is for the balancing charge. To the extent we have debited in the P&L account, if you recover on sale, will be your income. To the extent we debited in the P&L account for the scientific R&D assets, on recovery of that amount will be credited in your P&L account as deemed income under section 41 class 3. Income beyond the original value will be short-term capital. Income beyond the original value will be your capital gains. Is that okay? There also we will learn this. The same concept will be applicable. But one thing is true here, we don't have the loss. There we have the term that will not be applicable here. I think. here we have covered. Because here the WD value is 0, then definitely whatever the sale value may be, it will be your income only. The same logic will be applicable, but loss is skipped. Instead of section 30, means section 41 class 2, here we have what? Section 41 class 3. Okay, hope now you will be able to understand this one. Next. If the asset is, after sometimes usage in the previous year 24-25, the asset transferred from R&D to regular business factory. What can we do, sir? While transferring, this workshop already has block of asset. Plant and machinery, 15% block. Its WD value be 600 lakhs. Now, opening WDV of the asset being 600 lakhs plus asset transferred from R&D to business, regular business. What is the value? 0. The asset value was already depreciated 100%. Today the value of the asset being 0. So 0 will be the actual cost. In the opening WDV 600 lakhs, we have around 12 assets. By transferring one more asset, now we have 13 assets. But the value remains 600 lakhs. And 13 assets we have. Thereafter, what you can do? If the asset exists, value also exists, you can claim the depreciation. Else, you can go for calculating the short-term capital gain under section 50. The normal provisions of depreciation will be applicable here. This 0 is called actual cost for the asset transfer from R&D factory to regular business factory. Okay. Where did I learn this? Where did we learn this? Come on. So the asset transfer from R&D to business will be considered as 0. Where did we learn this one? Have you learned that or not? No, sir. Huh? Section 43 class 1 actual cost related to the depreciable assets. Already we learned that along with the depreciation chapter. Let's see here. Section 43A class 1. Number 1. First point itself, this one. Asset previously used for scientific research brought into the regular business. Then cost minus deductions already available. Cost 100, deductions claimed under section 35 is 100 rupees. So now the value is usually 0. While bringing it to your regular business, you have to add with the concerned block, but the value is 0. Number of assets increasing, but the value remains 0. Clear? Hope now you will be able to understand. Okay. Now, sale of asset which was originally used for scientific research, where the sale happened without further use for the business, directly sold from the scientific R&D to directly it goes outside. Then section 41 class 3 will be applicable if sale value up to the deductions claimed under section 35. And if the sale value is more than the original cost, that excess amount will be called as short-term or long-term with indexation. Or sometimes indexation is there, sometimes indexation will not be there. No need to worry about this indexation logic here. You will study along with the capital gains chapter, not here. Is that okay? So you will get capital gains. It may not be short-term only because building, sometimes there may be non-depreciable assets. In case of non-depreciable assets, then it may be long-term also. Possible. Clear? But most cases it's short-term only. Most of the cases it's short-term. But there is a chances of long-term also. Understand this. Clear? Now what happens? Sale after it is transferred to the regular business purpose and used for some time. And later if it is sold, the same scientific R&D asset sold for around 30 lakhs. What we can do? Sale. The asset transfer from R&D to regular business is now sold for say 50 lakhs, then 550 lakhs, and number of assets being 12 lakhs. If it is transferred and added to the block of assets, then you just follow the same depreciation logic here. That's all. So on transfer for business use, add to the block of assets and the cost of acquisition being nil. Refer to the explanation number 1 of section 43 clause 1. Clear? This is 0. On sale after the business use, sometimes later, this will be usually short-term capital gain as per section 50 will be applicable. So what happens if any asset sold in a block where block becomes 0 or the asset becomes 0, then automatically you can go for calculating short-term capital gain under section 50. The same concept will be applicable. Hope you will be now able to understand these 2 points here. Clear? Now, come on, try this illustration. Machine costing 5 lakhs, purchased for scientific R&D purpose, brought into the business on 1/12/23. So earlier it was for scientific purpose. Okay. R&D purpose. Originally purchased for 5 lakhs. Brought to what? Regular business. When? 1/12/23. The market value of the machine on the date being 2 lakhs. Depreciation is admissible at the rate of 15%. Depreciation on this being 15%. Usually plant and machinery, default plant and machinery carries 15% depreciation. On 1/4/23, the WDV of the block is 10 lakhs. So for this, they already have the asset. So WDV on 1/4/23 being, this is plant and machinery, rate of depreciation applicable for this block being 15%. This is what about the block plant and machinery 15%. Opening WDV being 10 lakhs. 10 lakhs. The machine used for scientific purpose sold for 1,50,000 later. Now we transfer from scientific R&D place to workshop or regular factory. The market value being 2 lakhs, original value being 5 lakhs, the original value might have been already depreciated, means already deducted under section 35. While you are transferring that from the R&D factory to your regular business factory, the actual cost of this transferred asset assumed to be 0 as per section 43 clause 1 explanation 1. Now the number of asset increases but the value remains same. One asset is increased but the value remains same. The machine used for scientific purpose, in that this machine sold for 1,50,000 rupees on 4/7/24. 4/7/24. 4/7/24 means, let me first finish up for the year 23/24. Sale happens in 24/25 previous year. For this year, you can claim the depreciation. Depreciation on this being at the rate of 15%, 1,50,000 can be claimable. Then 8,50,000 being the WDV on 1/4/24, the first day of the current previous year. In the current previous year, 4/7/24, the asset sold for 1,50,000. So minus sale. Which asset? This asset sold for 1,50,000. You can subtract that 1,50,000 from here, then 7 lakhs will be the value. 7 lakhs will be the value. What is the amount of depreciation for the assessment year 25/26? What is the depreciation? Still we have the assets, values also there. You can claim the depreciation on this at the rate of 15%, which is 1,05,000. You will get the WDV as on 1/5/25. The value being 5,95,000. Is that clear? Actually, the asset transferred in the prior to the previous year and purchased for the R&D purpose some years ago. Prior to the previous year, it is transferred and it is included in that block, and we claim the depreciation for the block as usual model. In the current previous year, the asset transferred from scientific R&D to the regular business is sold here. Sold means any asset sold in the block of assets will be subtracted from the value. No, same way I can deduct. After deductions, find out whether there is asset as well as value also. Then you can claim the depreciation. Else, if assets are missing or value is missing, then you can stop calculating the depreciation, straight away go for the SLM, means short-term capital gain calculation. In case the sale value is 15 lakhs, what is the amount chargeable under section 43? Okay, 15 lakhs. What happens if the value being 15 lakhs? Is that okay? If the value being 15 lakhs, initially 10 lakhs and 0, 10 lakhs, depreciation claimed to being 1.5 lakhs and it is 8.5 lakhs. But the sale value rather than 15 lakh, 1 lakh 50, 15 lakhs, what happens here? If the sale value is 15 lakhs, the ultimate value being 6.5 lakhs negative. 6.5 lakhs negative. As the value 6.5 being negative, you have to again calculate short-term capital gain. In this case, sale consideration being 15 lakhs minus opening WDV plus any purchases falls in the block in that year. There is no any purchases. The WDV in the beginning being 8.5 lakhs and 6.5 lakhs you recover higher than the WDV value is called short-term capital gain. Scenario 2. Scenario 2. This is scenario B. This is scenario A. Clear? Scenario A and scenario B over. Next. What is the amount chargeable under section 43 clause 3 if the asset used for scientific research purpose sold for 2 lakhs or 7 lakhs without using it for further purpose? Now what happened? The asset used for R&D directly sold to the buyer without bringing it to the business purpose. If it is so, original value being 5 lakhs, deductions claimed under section 35 already 5 lakhs, today's book value being 0. Okay, 0. Okay. But sale value being 2 lakhs. If sale value being 2 lakhs, section 41 clause 3 will be applicable. PGBP income related to the sale of the asset used for scientific R&D without further business use. Right. And then short-term capital gain or long-term capital gain under section 50. Short-term capital gain. Under short-term capital gain, you understand how can you calculate sale value minus original value? Sale value minus original value. We don't have the short-term capital gain. The entire sale value is equivalent to your profit, as there is no any book value anymore. The entire sale value is your profit. Short-term capital gain also 0. Then all the profit becomes PGBP income only. PGBP income only. What happens in the second scenario if the sale value being, okay, this is a third subdivision, subclass 1. Now here, third subdivision, class 2. Okay, here 5 lakhs, already claimed deductions 5 lakhs, value being 0, sale value being 7 lakhs. The entire sale value will be profit as there is no any book value for this. And you cross verify whether there is any capital gain. Yeah, of course we have the capital gain as sale value is more than the original value. Sale value is 7 lakhs and original value is 5 lakhs, you get 2 lakhs. The entire 7 lakhs profit is split into capital gain and balance being the PGBP. So the PGBP income is nothing but to the extent already we claim as a deduction under section 35. So the deduction is already claimed to be 5 lakhs. Profit to that extent of 5 lakhs will be your income under section 41 class 3. Clear? Hope now you will be able to understand this part thoroughly. If you have any doubt, you can ask me. Section 35 AD specified business. Okay. A list of business, around 14 business lists is there. In these cases, they can claim the deduction for any plant and machinery or assets you purchase, no, 100% reductions can be claimed up for this business. Okay. Now, let me first finish up the list of specified business here. First set is all about building and operating in India. Building and operating in India. And developing and building a housing project. Setting up and operating. The list of 3 blocks. List of 3 blocks. If you go and refer your institute material, no, the benefits given for these business may be applicable from some certain dates. Okay. If time permits, you can have the dates also in your mind. Otherwise, you can memorize the companies only, means business only. If you are involving in 2-star plus hotels, any hotels having 2-star category or above, 2-star hotels, 3-star hotels and 4. Those 2-star plus category hotels you can build, operate, no problem. You can enjoy this benefit. And hospitals with 100 beds. Hospitals with 100 beds. If you are constructing, any business owner constructs a hospital having minimum 100 beds, they can claim the deductions. They will be called as specified business. Specified business carries some benefits. And in case of housing projects, so one is building and operating, building hotels and operating the hotels. Another one is building the hospitals and operating the hospitals. In case of hotels, at least a 2-star category should be there, and beyond that, okay, eligible. In case of hospital, it should contain at least 100 beds. Only then you will be eligible for Section 35 AD benefits. Housing projects. 2 housing projects are falling under this. One is slum redevelopment. Another one is affordable housing scheme framed by central government and state government. Some buildings are named as affordable housings. Okay. As per that scheme, if you construct, you will get lots of benefits. Probably easy borrowing the loan and waiver of service GST and all. So those facilities will be there. So government promotes to go for building affordable houses for general public. So all should live in the own residential plots. That's what about the intention. Housing for all scheme. That will be named as housing for all scheme. Actually, maybe around 15 lakhs, 20 lakhs, that's more than enough to buy a house property. Okay, a flats. In case of affordable housing framed by central government's, state government schemes. Earlier, no, Tata also supposed to start their own venture in Tamil Nadu, the housing for all scheme, where they purchase the cement and all at a subsidized rate. So, all for house for all scheme was framed by the central government earlier, and even it's Section 35 AD. Is that okay? Another one is slum redevelopment or rehabilitation. So you need to make the slum free. Okay, Kala movie. No, what's that movie? Kala. That in Mumbai, Taravi. There was a slum, right? So they want to convert that slum into flats. Like, okay. Then immediately Rajini will come and stops that project and all will come. So let the slum will enjoy. Okay, those things are there. Slum redevelopment and rehabilitation scheme framed by the central government, state government also falls under this. So we have 2-star plus hotels, hospitals with 100 beds, slum redevelopment and rehabilitation, affordable housing for all. So all these things are related to the construction link. Apart from that, construction related to setting up and operating, construction related to warehouse like. What are the warehouses we have? Cold chain facility and warehouse for agricultural produce, warehouse for sugar. 3 warehouses, cold chain facility, right, to preserve under controlled temperatures, right. So it is the need of the hour and it becomes one of the popular business also. Okay. So nowadays, if you go for planning a house property, earlier, no, construction of house property will be compound to compound. Now, car parking becomes mandatory. Now, what happens, cold chain facility, a small warehouse with a refrigerated facility, maybe around minus 10%, 10 degree, like the chillness will be there, where you can store all the medicinal products and meat and all the poultry products you are storing and selling. Now this one becomes popular. This especially cold chain facility started its own journey from 2010 onwards and 12 onwards, slowly picking up. And during the COVID only, the importance was realized. It's not only cold chain facility, it's cold chain transport facilities also needed. Cold chain transport facilities. So during the COVID, no vaccinations. We can buy from foreign country. India can buy from foreign country. Pfizer and all were already available before. India's own vaccination, Covishield and Covaxin was introduced, right? So they could have purchased from outside. But the problem is transporting over the India in a controlled storage, cold storage facility. There is no such a facility. Now what happens in GeoMart? If you order any, probably even frozen desserts and all, even curd and all, you'll get. So one is storage facilities, another one is store, means transport facilities also. Cold chain transport facilities should also be there. If you plan to go for installing cold chain storage facility for storing agricultural, forest product, apiculture, dairy products, horticulture, floriculture, meat and meat products, poultry, processed good marine products, for all these things, no, you can enjoy the benefits under section 35 ED. Okay. So agriculture, forest produce, apiculture, bee, okay, honey, okay, if you are growing the bees and extracting the honey, that will also be requires the cold chain facility. Dairy products, horticultures, okay, like maybe for your hobby if you are growing, for that also, and floriculture. So flowers, right? So that will come under meat and meat products, poultry farming and storing that, processed food storage and marine related. For all these things, you can have the warehouse facility. That warehouse facility is called as cold chain facility, refrigeration and transportation. It may be static cold chain facility as well as moving storage facility. Both will be covered under section 35 AD. And you have the warehouse for keeping the agricultural produce as well as sugar. These things will also falling under section 35 AD. Apart from that, inland container depot, container freight station, ICD as well as CFS, in short we can call inland container depot as well as container freight stations, right? So inland container depot, okay, you might have seen that all in your movies, in most of the movies where the hero and villain will fight, right? Inland container, okay. You don't know, beyond that you don't know what for it is used, right? So all these things in ship and all. So if you are constructing that, also a storage like, also a storage like, and container freight storage, freight station, okay. So this is what about the freight stations, okay, clear. So if you are starting a business for this purpose, will also be eligible. Now come on, list down. So one is 2-star plus hotel, 100 beds hospital, slum redevelopment, affordable houses, okay, and then warehouse, cold chain facility, transport as well as storage, warehouse for agri, warehouse for sugar, and then inland container depot is related to the warehouse, so I grouped it, okay. Inland container depot, container freight stations. If you go and refer the text, the arrangement is totally different, okay. I just blocked this way, related to the construction of building like, and house like, and warehouse like. So by understanding this way, you can easily remember around 8 numbers already. Clear? That's the logic. Next, semiconductor wafer fabrication manufacturing unit. Okay, semiconductor wafer fabrication manufacturing unit. Okay, it's a separate one. Ninth one. So this is also manufacturing facilities like, and we have to understand the production. In production, we have two lists. One is fertilizers in India. Another one is bee wax, beekeeping, and production of honey. Okay, by beekeeping, if you are producing the honey and preparing the bee wax, that will also be eligible for Section 35 AD. Fertilizers in India, productions of honey and bee wax. Okay, so you can rear the bees. Okay, that will fall under this case. Fertilizers in India and bee wax. Okay, I was given the options to rear the bee also. Then I asked how it will get the food. So usually the bee should get the food from the flowers, right? But nowadays, no, the homegrown bees, they just feed the sugar syrup and all. Buy 1 kg sugar and mix with water and give it to bees. So it is not actually then honey, like the produce will be not equivalent to the original honey, but anyway, it is also available in the market today. Right. So original honey may be available only when the bees are in the forest. Right. Yeah, of course, now we have the bee wax and bee honey also extracted by doing the business, means rearing the business. Right. Also comes under this fertilizers in India, productions of honey and bee wax. So production. In productions, we have two lists. One is fertilizer, another one is honey. And laying and operating the pipelines like, especially, let's finish up this one. Cross country natural gas and crude or petroleum oil pipeline network. Okay, cross country. So in India, okay, clear. So in India, you can have maybe Pakistan and all. So from Afghanistan, you can lay a pipeline, or Iran, you can lay a pipeline to India. This is called cross-country pipeline. You can lay the pipeline here for transporting gas, crude oil, petroleum. Okay, you are transporting from other country to India rather than using the ship, container and all. Using the pipeline, you can bring it from other country to India. If you are laying this, okay, it's pretty sure this is only for whom? Reliance, not for us. Okay, is there any benefit for us, sir? No, we are only learning this. If you get the employment there, then you can apply this logic. Right. So in this pipeline, they can transport the petrol, crude and gas from outside, but provided if this was installed by Indian Oil Corporation, it should be allowed to be used by others also, BPCL, okay, and even Reliance Petroleum, for it may be. It should be shared with them also for it. Of course, you can record a charge. IOC installed the pipeline from one country to the other country to bring the crude oil as well as gas and all. Huge expenses there. And this pipeline is not only meant for the IOC. They can allow the others also to use this pipeline for a meager fees. Okay, meager fees. Probably. In case of gas, 1/3 should be given to the others to use this. And in case of crude oil and petroleum, 1/4 should be allowed to be used by the others. Of course, you can recover some fee. I was the person who initiated and spent the money for laying this pipeline. So, need to get some fee? No. So, they have the rights to get the fee also, no problem. So, this is called cross-country natural gas, crude and petroleum oil pipeline network. Okay. For distribution, including storage facilities. Even here or there will be storage facilities. So you install the pipeline from one country to the other country. Suddenly what happens, some militants dropped a bomb here, that's all, the entire pipeline will be lost. So what happens, no, here or there they will have a small storage facility. If anything happens here, they are just shut down here. and it will be resorted, and again they will start operating that. So such a way here or there they can have the storage facility also, not only pipeline, storage facility will also be included there, right? All these things put together will fall under this section 35 AD, right? Being integral part of such a network applicable. It is applicable for either Indian company or consortium of Indian companies. It may be either for IOC or IOC, BPCL and any other company. All the company, three put together can also establish station, but it should be approved by the authority. Condition: 1/3 of the natural gas pipeline or 1/4 of the petroleum product pipeline should be in common carrier basis to others, not being the associated persons. You can give it to some others also use this. So if I means bring around 1 lakh liters, then out of that 25,000 should be for others. They can also import through this channel, and you can collect the fees for that, right? So this is called cross country natural gas. Apart from that, 12th one is all about slurry pipeline. Slurry pipeline. Okay. So it's a molten state pipelines. Molten state pipeline, steel. Okay. Slurry pipeline. So for transportation of iron ore. See, iron, you think it's a solid state, but in a molten state, it can be transported using pipelines like water. So that's what about slurry pipeline. So these pipelines, so you can transport your this raw steel and some equipment also. You understand now? So this is called slurry pipeline. If you are using the slurry pipeline, okay, for what? Transportation of iron ore, also be eligible under section 35 AD. 35 AD. So production of fertilizers, honey and beeswax, laying and operating of two types of pipelines. One pipeline is for what? Petroleum, gas, crude oil. Another pipeline is for what? Iron ore. The iron ore pipeline is named as slurry pipeline. Is that clear? Apart from that, the last one, infrastructure facility done by Indian company. Infrastructure facility means construction of a road, bridge, rail system, any highway project, including housing or other activities being integral part of the highway project, right? So in the highway project, now here or there will be housing project also available, right? Like some shopping complex and some refreshment centers and employees to stay. The complex may be developed. All those things also will be falling under infrastructure. Water supply project, water treatment system, irrigation project, sanitation and sewerage system, solid waste management system. All these things are falling under infrastructure. Port, airport, inland waterway, inland port, navigational channel in the sea. These things are falling under infrastructure. Come on, give the list here. First, we completed 8 items. First item being 2-star hotels, and second being 100 beds hospital. Third being slum rehabilitation and development. Fourth being affordable houses. Okay. 5, 6, 7, 8 are for containers like so cold chain facility, and warehouse for agri produce and sugar. Another one is for import export, inland container depot, container freight stations. And ninth one being semiconductor wafer. Semiconductor wafer. Okay. Apart from that, we have the productions of what? Fertilizers and honey. And 12, 13 is all about pipelines. What are the pipelines are there? One is slurry pipeline, another one is cross country, okay, crude oil pipelines, okay, for transporting. The 14th one being infrastructure. Is that clear? Hope now you'll be able to understand all these points. I request to go home and have the glance over this from CA Institute material. Okay, it will be a lengthy topic. It will be available for some companies or some specific business now and then. Okay, the dates may also be there. So I have not included the dates here from when it is available. All okay. Any of the calculation part will continue in the next class. Do a recap of this particular AS number 35.